Hello traders, how are you? Vladimir Ribakov here from Traders Academy Club. Welcome back I should say, to the weekly Forex forecasts. This week is for 28th of April until the 3rd of May 2019. First of all, happy Easter to all those of you who celebrate during this weekend, and happy 1st of May Labor Day to all those of you who would celebrate this day. As you know, on previous weekend I was not available and not able to record my weekly forecast. I was sick and my voice went broken. It's still not on the best conditions, but good enough to go and record. So I hope you can understand me well. You see my chart now, yeah? Yep, yeah, should be good. So once again, welcome back. I couldn't record my video, but what I did was this post in the blog, right, with the mini forecast, included several interesting opportunities the way I see it, and we will discuss about them, of course, as well. So for all those of you who are watching us for the first time, welcome to our community. I hope you find the forecast useful. I invite you to join us to the channel, subscribe below the video, and to join us in the community Telegram channel, completely free of course, open community channel in the Telegram group, in the Telegram application, sorry. Just below the video in the description, look for the link to join, where you can enjoy all our work there that we share during the week. So let's begin. What we do is we always review the previous weeks. Now, since the previous week I wasn't able to do the video, so what we will do, we go and review the 2 weeks back forecast, basically just to make sure and to see what worked, what failed, what is still relevant, and what has to be updated. Then we will go over this one, so we do it parallel. And on Monday, as every week, I will publish the PDF structure for the, it will be actually in the blog, the summary for this video in a written text. So just come back on Monday to the description and also in the comments, and you will find a link for that, or simply follow my email and the newsletter for updates, or the Telegram channel, right? I'll let you know there. So let's start. We'll go to the previous one. The Euro Pound was the first pair we were following and looking to trade for long-term sells. That was our idea, right? To get it to the top of this channel and look for sells. And this is where we pretty much still stand. Nothing really changed since, right? We have this top holding, this spike here, and this area all holds, well, so far pretty stiff and strong. By the way, if you hear this noise, it's extremely windy here today, so I hope I'm not going to fly now. So what do we have in that place? We have this beautiful engulfing pattern. This is a part engulfing, body to body. We are holding the top of the range, and according to the weekly cycle, we are after sell. So basically this is what the weekly has for us. It was a triple cycle to the upside, so our expectations are like 2 waves. There is no divergence at the ending part, so the assumption is that we should, for the longer view, see the pair pushing lower. So our idea here is to look for sells, and since daily was a divergence against us, it was bullish divergence at the end of this double wave cycle. Since this moment we accept the corrective cycle. Corrective cycle could always be in 2 waves. Corrective cycle could be a range, and that case specifically it fits for both. Now we should be looking for bearish evidences. We had one with holding this top and trying to fake break it, right? Divergence in play. The best, of course, would be when we go below the trend line. It should gain a good momentum. But the evidences are there looking for sell. And I expect the Euro Pound to continue lower. Will that change anything in our plan if we will have a bounce, first of all, to try and create like one more visit on the top of the range? Of course not. It will just change the timing of the entry for next attempt in the sell. It doesn't change the cycle, it doesn't change the view of the trend we should be looking to trade. The only thing it might affect is the timing for the entry, the good time for the entry. That's pretty much it. Now the next one was CAD franc. For this one, the idea was to see that rallying to the resistance area and from there making correction before the further buys, right? So here we are. This was the place. Let's go back to here. Okay, this is the resistance zone. Okay, let's I can see that this way. Yeah. So here we are at the resistance area. 1, 2, and we are visiting during this week. We were visiting on the next one. So we got this pullback down and the continuation upside all the way to the next critical area. Oh, sorry. And now what happens is that the daily chart is blocking it by this resistance, right, with some kind of moving average divergence. And definitely is acceptable for corrective cycle. So that could be in one of the variation as we always pick, right? It could go as 2 waves, or that could simply block inside this range. Would that be acceptable as a ranging correction? Of course, yes. Why? Because a corrective cycle could be in 2 waves, A, B, C, D, or it could be a structure like this. A range, right? Fake breakout upside, fake breakout on downside, and ranging continuation. So from my point of view, it could easily play this way, or simply rally, make one more push, create here double wave correction, bullish divergence, and make its fly later on. So from my point of view, sorry, click the wrong button. So from my point of view, we should be looking for bullish evidences, relying on the longer term view. Drops with bullish evidences like candle patterns, like bullish structure, false breakout to the downside, bullish divergences, and so on, are all evidences to look for to join this trend. Okay, now I do want to quickly show, according to the this is the SPT, the Swing Point Trader, a strategy that is shared in the Traders Academy Club. Look at this beautiful combo we have on the swing point. When we take a look here, both 4-hour, which is currently neutral, but if that holds the momentum, it turns to be bullish, and then we are after buys. And if it does the second leg down, as we discussed, back to the cloud area, from this moment we would be looking where it turns and becomes green again, and looking for our buys. This is 4-hour chart. And according to 1 hour, it looks ready. So we need to see, can we manage to gain the momentum here and continue the rally? Remember the big picture just explained currently, that we are still acceptable to move inside these kind of ranging conditions, right? For some time, for a while. It's okay and acceptable for short term. Don't be surprised if it happens. Be prepared for that, because it's important to understand in advance how price could develop, so you don't find yourself saying, but it has to go up, and it doesn't, and you don't know what to do. Right? So it's very important to prepare yourself to this situation, so you aware of possible price movement, and you manage your risk accordingly during these scenarios. Next one on the list was the Aussie versus the dollar, which was reaching a top. The idea was here to see the break of the trend line, or if it doesn't break through, get pullbacks and look for buys. Now what happened since, let's take a look on the Aussie dollar. Some bad CPI news actually made this trend line to hold, right? It was a fake breakout, but the drop down invalidated. It was one straight leg and invalidated this low. So to buy retraces as long as the invalidation level holds, this idea failed. Now the Aussie dollar has for us a completely new low. Does that have a reason to buy? Answer is no, not yet. And if we look on the weekly chart, it could easily struggle around. It could still push lower. It could go and zigzag here. There is no evidence for anything clear at this level because the divergence is there, is developing. And I want to remind you that from the monthly cycle, the last divergence is also bullish, and that's why the bulls might take the control any single moment. When? We don't know. The fact is that currently the momentum is bearish, and I would not be surprised if we see anything like that until the divergence is recreated, and then we can start looking to buy again. What would be the reversal signs for buys? False breakouts and higher highs. This is a possible reversal for buys, or an alternative is the creation of a bullish trend, which is based on price action, triple highs, triple higher lows going upside, and then buy retraces. So once we see that, we can start talking about buys again. As long as we didn't see that, we can easily see the Aussie dollar do anything like that and continuing lower. So I would not be surprised at all to see that actually go and do that. We don't have the evidences for now to buy on the current time frame, so we might see that Aussie dollar at this time pushing slightly lower. That would be more than acceptable. Why? Because it simply invalidated the last most important low on the daily chart. When exactly would be the next turnaround? How can we know anything like that? We can't, right? And that's why the current short-term momentum remains bearish after the invalidation. And the way to turn it around and look for buys again would be as described, with a false breaks and higher highs, or triple higher highs, triple higher lows, based on a price action movement. The next one on the list, sorry for my nose, guys. The next one is the Euro versus the Aussie. Our expectations was to see that pushing lower, creating this divergence, and start the reversals. So this is what we pretty much faced on the Euro-Aussie during this period. Pushed a bit lower, made the divergence, make here a fake breakout, right? And making the retrace. So the biggest question is what's next? Now my long-term view remains bearish, which means I'm after sells, right? This is what I would expect. And on the short term, rallies are more than acceptable to happen. They could easily make these two waves and sell. That could easily make here some kind of a range and then sell. Whatever the case is, my personal preferences for the long term here are look to sell the rallies with bearish evidences. As simple as that. And this view remains, nothing changes. Next one was the euro dollar. Now this one, a couple of weeks ago, this was completely wrong for me. I personally had a loss there and had to cut this loss when one of the filters that I work with happened. Now in the live trading rooms we can always discuss about that. In the weekly videos, unfortunately, we had to wait for 2 weeks because previous week I was sick to discuss about that. But let me explain you what is this technique that you need to pay attention to. So first of all, what was my idea? My idea was to look for buy retraces because we did have the structure. Let me show you this. This, right? Triple highs, triple lows going up. We wanted to buy retraces, of course, with bullish evidence. And as I always say, the whole thing here is how do we get the retrace? You heard me saying in this video, and for those of you who watch me for a while know my techniques and my approach. Corrective cycle could be in 2 waves or a range, meaning 1, 2, and then look for evidences or a range. In that case, bullish hidden divergence would be acceptable because we actually in a bullish trend assumption, right? Based on the triple high, triple low going up. And what happened here is the Fibonacci retraces. Look what happens at that moment. It goes one straight leg through all the Fibonacci levels. When you face something like that, not in two legs, which is a corrective cycle, but one straight leg through all the Fibonacci levels, this is a warning sign. What to do with warning signs? First of all, my approach is when market conditions become aggressive, you apply conservative approach as a trader. Meaning that you can wait for the next setup or work with much lower risk or simply avoid and look for clearer scenarios. And if you take a trade and you see signs against you, cut. You heard many traders talking about that. It's true. Cut your losses early as you get signs against. Most traders, what they do, they convince themselves it will be fine. They always find a reason. They always find someone to say, but this guy said, or this guy said, or this has to go up and blah, blah, blah. Instead of listening to the facts from the market. I always say that the market doesn't care how well you, me, or anyone draw the lines. The market doesn't care how well you prepare the plan. Instead of you find yourself marry the idea, listen to the market. As simple as that. What the market tells you. And if you have to adjust your plan accordingly, do that. Learn from that. So I wanted to do this, explain how and why the euro dollar is irrelevant anymore for buys once it breaks that. After that, what happened, it made two waves retrace and break down. This becomes again a bearish pressure. Invalidation below this level, euro dollar is bearish. Until when? We still have our level around the 110, don't forget that. And we very likely would see this fight around this area later or sooner. Weekly divergence is still in creation. When it will happen, we don't know. As for now, the pressure is bearish. Like with the AUD dollar, as long as one of the next scenarios didn't happen, as long as we didn't have false breakout and higher highs, or as long as the euro dollar doesn't apply again, triple highs, triple lows go up. If that managed to do it here, we'll switch and look for buys. As long as it didn't happen, the pressure of the euro dollar is bearish. And this is very important thing to do. Once you figure out the idea you plan does not follow, adjust yourself. And that means go neutral or change the directions if there are signs to change the directions. But do not ever try to convince the market, yourself or anyone around you, that it still will be fine. Most of the times it will not. Learn from that and act better the next time. Of course, if you find yourself dealing with these situations. Next one on the scenario was the euro versus the kiwi. The idea was for us, look for retraces and then buys. So let's take a look what do we have on the euro kiwi. We are facing the retraces. And I believe that we should be looking from these areas for the next portions for buys. So what do we do? On the lower time frame, we are facing here some kind of a triple cycle. We are expecting two waves, ideally to this zone, right? Once that happens, this should become as a bullish divergence, and then we switch on the buys again. This is the plan. Once the correction completed, look for the buys. By the way, this was the same also shared on my mini weekly forecast I did on the blog previous week when I couldn't record, so it was drawn. I will discuss about the next pairs soon, but that was, oh no, sorry, it wasn't. It was Aussie Kiwi. Oh, no, Euro Kiwi we don't have here, sorry. So this was the plan, and it's going good so far from 2 weeks ago, and now we should continue to follow that. Next one was the Kiwi versus the CAD, 2 waves and expectations from that to go lower. Let's take a look how do we have that going. That were the 2 waves we are facing. We did go lower since then. And what do we have right now? The idea of the Kiwi CAD. For the long term, how do I read here? For the long term, we have this triple double, which means we are after sells, right? And we should be looking for sell setups, this or after retraces. Daily chart, currently facing some kind of bottom of a possible range, 200 moving average, some kind of bullish divergence, so we can face here some kind of corrections before the next sells. So the 4-hour chart could be on any of the waves like this and sells. It could simply make some range for us and then sells. Basically the idea here is now we are an acceptable corrective cycle. It could be 2 waves or a range. This is the idea, and that's how we expect that to be developed. On the 1-hour chart, for those of you who love the short-term excitement, it has kind of a structure of 300 highs, 300 lows. If it does provide you 2 clear waves or a bullish hidden divergence, this could be the place to look for this second leg to be developed. So pay attention to that. For those of you who love the short term, if it does give you the bullish evidences, it's very important to remind it, because sometimes we say, oh, I just want to buy. Don't do that. It's a mistake. Trade with facts, not beliefs, lines, predictions, or wishes. Fact is when you have an evidence, bullish divergence, trend line break to the upside, 2-wave retrace and bullish divergence, false breakout, and so on. That's facts. Okay? Trade with them. So that's for Kiwi CAD. Dollar yen, our expectation a couple of weeks ago was basically retrace and continuation up all the way to the trend line. So this is what we managed to do, right? Retrace and rally. And basically this is the discussion from the previous week. Here. From this trend line we would be looking for sell evidences. Now this is what we currently have. We have the trend line. We have a massive engulfing here and a bearish divergence. Now here comes the thing. While the technical setup looks perfect, Japanese central bank would be away for the longest vacation. You can Google and see that more information about it. The longest period of holidays, and that could cause. Would it cause? We don't know. Many traders are very, very afraid of that. Maybe for a good reason. Probably for a good reason. But we never can know. Will that have the real impact or not? Many times the fear comes not real, but you still have to be ready for that and prepared for that. And in a lack of stability, a lot of algorithms or traders or the noise creators might try to take the impact and cause zigzags. So that might be not technical for the yen pairs. Technically speaking, the assumption here, as long as this low holds, we should see the dollar yen go lower. But be aware of what I just said about with the holidays. If the price goes back and forth like this, avoid trading it. As simple as that. It doesn't worth it. Okay? That's for the yen. And the next one, before we go to the Euro franc. So our plan with the Euro franc is bullish, looking to buy retraces. This one is also, I think, no, that was CAD franc. Euro franc, buy retraces. So here are the retraces. They started a bit later. I was expecting them here. They started a slightly later, but from the top of this range, and the expectations remain the same: retrace and looking for buys. So what are we looking there on the lower time frame to see? Bullish evidences. That could be anything like bullish divergence. That could be anything like false breakout, higher highs. That could be anything like drop, and then triple higher highs, triple higher lows, and buy retraces. Straightforward. Next one on the list, Aussie Kiwi. My view, you know that. Retraces from this critical area of closer to 107, and then buys. Here. So we reached this area, the 200 moving average, cleaned the stop losses that were located here as expected, and here comes the correction. Get ready for the next possible buys with this bullish hidden divergence to form, complete, and we are expecting the next portion. 4-hour chart has for us the structure of triple higher highs, triple higher lows. We do expect corrective cycle. That could be 2 waves and a buy. Okay, so once that becomes as a bullish evidence, bullish turnaround, bullish divergence, false breakout, higher highs, all the things I always describe, we are after buys again. So we want to make sure that 4-hour chart fit in the daily hidden divergence and provide a buys. What should be aware of, like I mentioned with the euro dollar? If we cross one leg straight through 61.8, be careful. It's a warning sign from the market. As long as it didn't happen, the plan remains healthy for the buys. Aussie franc, the expectations were a little pulled back here from the resistance area, and continuation of the rally. So we got this blockage, right? Little pullbacks, continuation for the rally, right? Twice, one here, one later, and continuation for the rally. Since then, here is a suspicious sign that I don't love to see. One straight leg. Yes, it was based on the fundamental news, but the fact is, it's a straight retrace in one shot. And personally, at this stage, I don't have any view. Well, I have a view, and it's neutral. I don't love to see such fast, strong, unexpected reactions. There was no divergence against on these tops. My personal view is we are still after buys, but as for now, I would remain neutral because there is nothing which we can refer to as a setup. So for me, Aussie franc is neutral at this stage. And that's for the couple of weeks ago. Now, previous week we shared the 2 ideas. Pound dollar to approach to critical cubes, as you can see here. Let's enlarge it a bit. Slightly below the, well, around the area of 129 or closer to 127. We should be looking for the buys. We are currently holding around this first area, the 129. And we do need to see reversals. What kind of reversals? Same. False breakout and higher highs, or higher highs, higher lows, and then buy retraces. Do we have it at this stage on daily? No. Do we have it on the 4-hour chart, which is the next time frame to the daily? No. Do we have a reason to buy? Not yet. And it could go and dance around this area, or try to clean the one before here, and only then to make a reversals. Let the current momentum is bearish. Let that continue. Let it create the reversal for you. It did. Attack. And this is the time to remind you. That's where we have our live trading rooms. Day after day. To talk about these setups once they happen. And before I continue, I would like to take 20 seconds of your time. If you are new to the channel, I invite you to subscribe. And I would like to ask you to show your support back if you enjoy this work I do for you. Hit the like button and leave some comment below in the comment section. Your help is very much appreciated and help me, well, motivate me to do that for you guys. And of course, you can feel free to share the video with any one of your friends if you would like. And thank you in advance for your help. So that's from the Forex view. Do we have anything besides that? My answer is no. Currently not. There are several pairs which are interesting. I don't find them, well, I would say healthy enough to take longer term risk based on. The shorter term view, they are acceptable, like dollar franc, for example, but for longer view, no. And all these short-term opportunities are not for all traders, and definitely not for those who are looking for the longer-term views. So the commodities, gold and silver. Let's go back to here. Let me see, I didn't miss anything here. CAD franc we discussed. Gold, okay. Aussie Kiwi we also discussed. Pound cover, dollar yen discussed. Okay. Then the gold. Our view was triple bottom, sorry, or one more low, and looking for the buy setups. That was same here. Okay, same idea. So we got closer to this place where we were looking to hunt. This is what I call a bank zone here, inner area. We got it here. Clear the stop losses. Now increasing the volumes by making 3 higher highs, following higher highs on the daily time frame and higher lows. Beautiful bullish divergence. Now this is kind of a slowdown pattern. If it breaks through, it's a very good healthy continuation for upside. On the shorter view, 4-hour chart had a false breakout, had the convergence idea that we are always looking for, healthy conditions for buys. So the gold became bullish as we expected. This is in validation level. Why it's important to have this in validation level? Because if it crosses suddenly, and that could happen, down, then the correction might get simply deeper and take us below this trend line, right? All the way to the next critical levels. You see? If it breaks through that, and the next critical levels would be right here, around 1240, 1250. So that's why it's very, very important to have this in validation level for you. Because if it validates, you don't know how deep it could go. Will that be fake, or would that be real? So instead of finding yourself guessing, trade facts. Invalidation is critical. Retraces and buys is still the plan for the gold. Next one, silver, pretty much the same. Bottom and looking for the buys, right? So here we are. Bullish divergence, breaking through the last trend line. Looks good. Same with invalidation right here. Okay, the expectations for the silver, like the gold, are bullish. Now oil. I was looking for possible sells. I wanted to see triple higher highs, triple lower highs, triple lower lows, or false breakout. Back then, we never got it. It was only 2 lower highs, lower lows, not 3. And the false break happened only now, during this week. So now the oil is back to the bearish view. This would be the best setup, of course, if it happens. Sell the rallies for the oil. It looks good for a bearish continuation, and I think it has a room for some good healthy correction. Levels to watch for that correction start from the 61, goes through 57, 50, and then possibly all the way to 54, according to Fibonacci retraces. Dollar index, the idea was as the triple top holds, look for sell setups. Mirror to the euro dollar. This idea failed completely here. Never did hold. And we have a new high. Look at that as a mirror to the euro dollar. We are currently bullish. This would become the divergence on the next step when we don't know. Currently it's bullish. It could turn around next week, or it could continue slightly higher and then turn around. As for now, it's bullish. This is how it remains. The idea for us would be enjoy it as long as it continues, and once it turns around and makes the reversal. What are the reversals I'm talking about? Lower highs, lower lows, and then sell the retraces, or false breakout and lower lows. Once any of them happened, back to bearish. As long as it didn't happen, the pressure is bullish. That's how I see the interesting coming trading week. So once again, welcome back to the weekly forecasts. I hope my work is helpful for you and you enjoyed it. If you did, I would like once again to ask you, show your support back, hit the like button, drop some comment below. It will take 20 seconds of your time. It will give me 20 more days of motivation. Pretty good formula, isn't it? Thank you in advance, and I'm looking forward to see you in my live trading rooms in the Traders Academy Club. And don't forget the SPT trading strategy with the scanner, with the trend clouds and the trend filters are waiting for you there, completely free. So thank you very much for watching. I'm Vladimir Ribakov from Traders Academy Club, and I wish you a wonderful trading week. Bye for now.